Hello everyone out there. Welcome to our YouTube channel Finbuzz Learning. In this video, I'm going to explain to you what is debentures, what are the features of debentures, their types and their advantages and disadvantages. So without any further delay, let's get started. Let's first know the meaning of debentures. So, a debenture is a tool a lender, such as a bank, uses when the supplying capital to businesses and people. Even if the borrower misses a payment, it permits the lender to enforce loan repayments against the borrower assets. Debentures are commonly issued by both businesses and governments to raise cash or money. A debenture is a formal document that details the principal amount of the investment, the interest rate, and the frequency of payments. When the debenture matures, the investors often get their principal back, that is, at the end of its term. Accordingly, throughout the loan period, the business normally just pays the interest, that is, a portion of the certificate's face value or the loan amount. And when the certificate expires, it pays back the entire principal, means the loan amount. Now, let's discuss the characteristics of debentures. So, the first one is interest rate. So, the interest rate that the corporation will pay the investors or holder of debentures is known as the coupon rate. It is possible for this coupon rate to be fixed or floating. A floating rate may be connected to a benchmark such as a yield on a 10-year treasury bond and will fluctuate in response to changes in the benchmark. The next feature is credit rating. So, the interest rate that investors will be paid depend on the credit worthiness of the firm and eventually the debenture. The credit worthiness of corporate and governmental issues is accessed by credit rating firms. These organizations give investors a general overview of the dangers of making debt investments. The next feature is the maturity date. So, the maturity date for non-convertible debentures is a crucial component. The company must repay the debenture holders by this date. The business has alternatives regarding how the reimbursement will be made. Most frequently, it takes the form of redemption for the capital, in which case the issuer pays a one-time sum when the debt matures. As an alternative, the payment may be made using a redemption reserve, in which case the corporation make regular payment until complete payback is made at the maturity date. The next feature is no voting rights. So, the holders are the firm's creditors, but they do not have voting privileges at general meetings unless the company specifically requests their inputs. Now, coming to the types of debentures. So, the classification of debentures is based on factors like redemption, duration, convertibility, security, kind of interest rate, coupon rate, demonstrability, etc. Let's discuss them one by one. So, the first categorization is from the point of view of security, under which there are two types of debentures. The first type is secured debentures. So, debentures that have a charge placed on the company's assets or properties in order to receive payments are known as secured debentures. The charge could be fixed or floating. The floating charge includes all assets, excluding those accredited to the secured creditors, whereas the fixed charge is established against those assets that are placed in the company's custody. for use in operations not intended for sale. A floating charge is placed on the entire enterprise's assets, whereas a fixed charge is created on a specific items. And the other type is unsecured debentures. So they do not have a specific charge against the company's assets. So on these debentures, nevertheless, a floating charge can be created by default. These kinds of debentures are not typically traded. Now, the next categorization is from the point of view of tenure. So, again, there are two types. The first type is redeemable debentures. So, these bonds are ones that must be repaid in full or in installments at the end of the time period, depending on how long the business has been operating. Debentures may be redeemed at par or at premium. And the second one is irredeemable debentures. So these bonds are sometimes known as perpetual debentures because the corporation makes no efforts to return any funds obtained or borrowed through the issuance of such bonds. These debentures must be repaid when an enterprise shuts down or when a considerable period of time has passed. Now, the next is from the point of view of convertibility. So, the first type is convertible debentures. So, convertible debentures are those that can be changed into equity share or any other security at the discretion of the business or the debenture holders. These bonds have either full or partial convertible terms. The second type is non-convertible. So, the non-convertible debentures are debentures that cannot be converted into shares or other securities. This category includes the majority of debentures issued by businesses. Now, the next categorization is from a coupon rate point of view. So the first type is specific coupon rate debentures. Such debentures are traded with a specified interest rate or coupon rate, which is what gives them their name. The second one is zero coupon rate debentures. Normally, these debentures do not have a fixed interest rate. Such debentures are issued at a sizable discount in an effort to win back investors, and the difference between the nominal value and the issued price is regarded as the amount of interest related to the period of the debentures. Now, the last categorization is from the point of view of registration. So, the first type is registered debentures. Well, these bonds are the kind of bonds in which all information, including addresses, names, and holding details of the bondholders, is recorded in a register maintained by the business. Such debentures can only be transferred via a standard transfer document. The second one is bearer debenture. So, the company does not keep any record of the holders of these debentures, which can be transferred by delivery. A person who provides the interest coupon that is included with the debentures will receive the interest due. Now, we will be discussing the benefits of debentures or bonds. So, the first advantage of debentures is fixed income for investors. Regardless of whether it makes money during a fiscal year, a corporation is required to pay interest on the issued debentures. A fixed income is thereby provided to the investors. Equity stockholders whose dividend is purely based on revenue are exempt from this. The next advantage is secured investment. Since the assets of the issuing company are typically charged as security for debt securities, holders may sell the asset in the event that the issuing company files for bankruptcy or becomes insolvent. The next benefit is fixed return even during inflation. So debenture interest rates are fixed and unaffected by price movements, providing a consistent stream of income. The next advantage is no dilution of ownership. In contrast to businesses that issue stock capital where control is diluted because of the holders' voting rights. Holders of debentures do not have any voting rights and are not permitted to participate in company meetings. The last advantage is cheaper source. Debentures are a less expensive method of funding for the company because they have lower listing and flotation expenses than equity capital. Now, coming to the disadvantage of debentures. So the first limitation is no voting rights. So holders of debt obligations are not permitted to vote or attend corporate meetings. As a result, they are unable to influence decisions or policies within the organization. The next disadvantage is rigidity as to interest payment. When a firm issues equity capital, the dividend rate can be adjusted in accordance with the amount of profit released. However, when a company issues debentures, the interest rate is fixed and interest must be paid whether there is profit or not. The next limitation of debenture is less control over mortgaged assets. Assets that are the subject of charge cannot be used freely for business purposes since the creditors have authority over them. This causes resources and assets to be underutilized. Hope the explanation on this video helped you to understand about debentures. If you have any question related to the topic, please post into the comment section so that we can help you. Also, if you like the video, please like and share, and yes, please don't forget to subscribe our channel.